Nimish Mehta, founder research at Delta Advisors, and Aditya Khemka, fund manager at InCred Asset Management, join in on the show. Gentlemen, thank you very much for joining in. Even yesterday we knew, right, although it got exempt, we knew that future tariffs on pharma are not entirely ruled out, and now the president has said it's coming and in not so distant future. So Nimish, first share your thoughts, right? What could be the base scenario and what will be the impact on Indian pharma?
Thank you for having me on the show. What I understand is that, the pharma-related tariffs are not strictly going to be like the reciprocal tariff that we have seen for other sectors. It is more to do with safeguarding their essential product supplies and also to probably safeguard some of the technology that otherwise gets shifted outside of America. So this is more like, Atmanirbhar Bharat kind of a thing, and less like a reciprocal tariff, which is a reciprocal tariff, I understand, is just evening the differences between tariffs of two countries, something with, US and the other country. So in this case, the focus is likely to be product specific and essentially on products which are supposed to be essential medicines for the US market. And that's how I feel it is likely to happen. And in that case, China would be one of the biggest impact, losers in a way. And indirectly, that might also even help Indian companies. That's my first view on that.
Okay, so which products, Nimish, to your mind, would be most affected or would come under the purview of these tax? And you're saying we're not going to get a baseline tariff, even if it's, say, assume a 10%. You don't think that's the likely scenario? And then coming back to the point, product specific, which products, and why do you think China is going to be impacted more?
So first of all, China, because, most of the essential products or the APIs are being supplied by China. And that would include, even the essential products is what I believe. And that is, and we also know that there was, even before Trump came in, we already had a Biosecure Act, which was targeting China and essentially to ensure that the technology doesn't go away. So China, one, has high CDMO exposure, and two, because their APIs are dominating the market, including that of US market. And that's why that is going to be of, higher impact to them. Second, I particularly don't know which are the products which are considered as essential products for the US market. But if I may to make some guess, probably some cancer medicines and, cardiovascular medicines and stuff like that might probably be under pressure. But I really don't have that information as to which are the essential medicines considered by the US market.
Right. Aditya, let's bring you also into the conversation. Yesterday morning you joined us and you said that pharma tariffs are not yet being imposed. The relief that we enjoyed yesterday was very, very short-lived. Aditya, your first take on this, and also if you could help us, if you've done any sensitivity analysis in terms of, which are the companies you expect or which are the players that you expect to be most impacted. Will it be the generic players? Will it be the CDMO players? Or will it be the specialty pharma players?
Hi, good morning, and thanks for having me. So just to begin with, I think the most impacted players will be generic players. The reason being twofold. Number one, the volumes of generics that goes from India is significantly higher than the volume of innovator products or specialty products or API for that matter that go from India to the United States shores. So the highest impact will probably be on the generic players. Number two, because these generic players don't have any bargaining power on the table. It's a commoditized product that they sell. Every player has the same product. So when it comes to the bargaining table with the buyer or with the government as such, they don't have any bargaining power on their side to sort of discuss any meaningful outcomes for themselves. So the pecking order would be mostly impacted would be generics, followed by API, CDMO, and lastly the specialty guys, because the specialty guys have the most bargaining power. They have patented products. So those products will have, help them to get more say into the matter compared to the generic guys.
Any tariff, whatever form it may come in, has to be borne by someone, Aditya, whether it's the end consumer, whether it's the distributor or the manufacturer. Now let's talk about generics to begin with. Since they might be potentially the worst affected to your mind. They already add wafer-thin margins. So what are the current margins? And, now that you have to do some sort of an analysis, right? Because you're looking into the future and the future is all unknown. But what could be the potential impact? How much will they have to bear? And therefore, the EPS estimates. And in that context, then how do the stocks look after the correction?
Yeah, look, so it's very, very difficult for us to quantify what margins these companies make in generics because they don't report these margins separately as such. They report a consolidated margin. What I can tell you is that if there are three potential buyers in US, wholesalers in US that buy from almost 300 plus pharma companies from India. And the products are basically commoditized. There is no differentiation from one manufacturer's product to the other. So if you just think of the bargaining power tilt here, the tilt is clearly lying with the three buyers versus the 300 plus suppliers. So in that scenario, who bears the brunt? Economics would tell us it is more likely to be the pharma companies that will, maybe not completely, but partially will have to bear the brunt. And then also so if you look at the complete supply chain, right? So there is the insurer, there is the wholesaler, and then there is the manufacturer. I think the most fragmented industry in any supply chain bears most of the brunt. And in this situation, the most fragmented industry is the supplier, which is the Indian pharma manufacturers. So if you have to sort of put me in a corner and put a gun to my head and ask who will bear the most of the brunt, the economics will tell us it has probably got to be the pharma manufacturer.
Right, and which is why we're seeing the kind of impact on the pharma stocks today. Nimish, just throwing a couple of phrases at you. Number one, generic price erosion, something that Indian pharma companies have been seeing for quite a while. Second is, a lot of companies are talking about reshoring back to the USA. And number three, something that you mentioned, relative better placed that India is compared to China. On all of this, what is your view, especially the fact that reshoring is expected to take quite a bit of time, right?
Correct. So yeah, I mean, what I understand is that the reaction that we see today on the stock market to me looks little overdone because yes, there is a lot of competition in the generic segment, and I fully agree. But the primary reason of this competition or the pricing pressure we see in generic is also because of Indian pharma manufacturers. So there are so many manufacturers, which is itself is kind of drawing the prices down in a normal market scenario. But if you look at Indian pharma as a consolidated unit, so their bargaining power is going to be very high. So in toto, if there is one company who is getting impacted because of the tariff, the most likely scenario is that all of their competitors or most of their competitors will also be in the same boat. So from that perspective, I believe that the generic prices may just go up, and in case where they just I mean the generics exit the market, then there is also a fear of having shortages in the market. That's what we have seen, for example, in the last few years, where GMP regulations became stricter, and you see so many factories actually under trouble, and that is what was driving shortages and also eventually the prices up. So my sense is that Indian pharma per se is kind of relatively better poised, and especially when you compare it with their counterparts in China. So that way, I think, I mean, yes, I mean, purely speaking, if you put a number in the Excel sheet and say, here is the profitability coming down, well, this is what the reaction might be. But if you say that, yeah, so it's a non-discretionary sector where you can't just avoid consumption.
Right. Thank you so much, Nimish, as well as Aditya, for joining us. It's still a developing story. We don't know the quantum of tariffs. We don't know when the tariffs will come. But Indian pharma stocks today are reacting quite sharply. Thank you once again for joining us. Let's now slip into a short break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta.